Ladies and gentlemen, K Kim here. Welcome to the daily update. I hope you guys had a good day trading today. Market has been hammered, absolutely hammered today. We got S&P down. S&P down close to 6%. We're pretty much down hard across the board. S&P down 6%. I think Dow and the Russell is down 6-7%. Nasdaq is down about 4%. Banks got hammered today, close to 9%. I think 8-9%. You can see some of the VIXs, UVXY, TVIX. I think VIX is up 30-40% today. So it's a huge down day. Huge down day today. After the island reversal, I actually tweeted out this morning when we're hanging around in that vicinity there. That this is an island reversal. You can see that there's a gap up and then we gap down right beneath the gap area. Now this turned into an island. Let's actually make that into, let's put a box there to annotate. That's an island reversal. And from that island reversal, we absolutely tanked throughout the day. We had this gap area. That gap area got filled and we just pushed right through it. And then we had that longer term move, the midterm moving average, right? The midterm, that blue dotted moving average there, and that moving average has a pretty decent resume. We was not able to we saw a little bit of move there, but we broke below it. But you can see since April that blue dotted moving average did act as pretty decent support. We blew right through it. We didn't even hang around. We just blew right through it. And guess where we're at today? This is, remember, you guys remember when I put this out? Remember when I talked about, okay, I'm going to put out this, rising pivot. I think this was back in late May 27. And we're going to track this. And we actually weren't able to track it because ever since May 27, that thing just rallied higher. So we really never really talked about this rising pivot. And isn't it interesting? We came right to that level. That's where the market decided that we're gonna have we're gonna close the day at that level, 300 level there, 300.62. 300 is a pretty round number, right? And so we are here. So where are we going here? Are we gonna see a further decline to the downside? Right? A lot of bears are probably thinking, that's it. This is the top, right? We're gonna go and retest the March lows. The second wave is coming now that economy is opening back up, right? That's what the bears are gonna say. So let's try to figure it out. And we don't wanna come into some dramatic conclusion without price action supporting it, right? The price action has to substantiate that. So this entire move, right? We've been talking about how we have to give benefit of the doubt to the buyers. Do we still need to give benefit of the doubt to the buyers as of today? Or does benefit of the doubt goes to the sellers at this point? Well, we have to understand the terms. So we've been talking about the short term, mid-term, and long term. My short-term moving average, it held a little bit, completely gapped below it. So that short-term moving average, no use at this point. The mid-term moving average, it had some efficiency back there in April and in early May. We came right through it. So we broke right below it. And now we have my long-term moving average right there, right here, right here. What's interesting about the long-term moving average is that last time we did see a pretty big drawdown. I think that was about 6% correction. Right now, I think we're dealing with 7% correction. 6.7, about 7% correction. So bears truly utilized what was happening with the oscillator. I'll get back to us. I'll update you guys on the oscillator, but for now, let's kind of stay here because I want to talk about the trend of things, right? Before we act emotionally, right? Before we think about, oh my God, this is a top, right? We're going to 220. Before we start thinking like that, because we have to understand there were times here, right? Those were 4, 5, 6% corrections. Here, here, and here. So I want you to know, and I'm not siding with the buyers, I'm not siding with the sellers, just looking at this logically speaking, when we look at the price section. Now I'm talking about more not being emotional. We've seen these kind of corrections before, right? As you can see there, we've seen it before. So if anyone is saying that this is the top, right? This is the top. We're going back to the March lows. Well, they've been saying it here in April, early April. They've been saying in late April. They said it in early May. They said it in mid-May, and they're saying it now after 45% run. You know that was a 45% run, right? So that was almost 50% run, and we're currently facing about 7% correction. So let's keep that in mind, that we've seen these kind of a 6-7% correction before. This isn't something we did not see before. We've seen it before in this year, last couple months. So this is not something new. Market sees a pullback. Market does not go straight up. So in the short term, I want to give benefit of the doubt to the sellers in the short term. Looking at 65-minute chart, right? In the midterm, in the 65-minute chart, that's my midterm moving average, right? That blue dotted. I want to give benefit of the doubt to the sellers in the midterm because we're below that moving average. In the longer term perspective, however, I want to give benefit of the doubt to the buyers because we're still above my longer term moving average. My longer term moving average is still what? Is rising, right? And last time, do you guys remember? The most commotion we've ever had before this pullback was back in late or mid-May. Remember how many people are talking about that triple top or head and shoulder formation, right? A lot of people are talking about that. That was the neckline. We broke below the neckline. A lot of people are thinking that was it. We're going back to the where? The March lows. A lot of people are also talking about the what? The 50% Fibonacci level. They were actually comparing it to, I don't know, 1929, that move before that thing crashed to 70-80%. They're also comparing it to 2000 crash and 2008 crash. A lot of people are saying that was a bear market rally. I'm just saying, like, that was the sentiment at the time. This was here in late or mid-May. We completely blocked that noise. If we looked at this subjectively, right? Objectively, right? At that point, even though we came down and retest that moving average here, and we saw, and again, you can go back and check my video back in mid-May, right? There's a gap area, and remember we talked about that is a still prospectively higher low, right? Low, right? That's a low, that's a higher low, that's a higher low, So at the time, I still wanted to give benefit of the doubt to the buyers in the longer term. Maybe not in the short term, not in the midterm, but longer term perspective, because we're hanging around the gap area. We're just hitting that the longer term moving average. And the scope or that direction of that moving average is rising. We're still rising here. So this is where we're at. We are bearish in the short term. Benefit of the doubt goes to the sellers, the bears in the short term. We are bearish in the midterm, but we are bullish in the long term. Does that make sense? So at this point, your trade has to be based on this sentiment, right? This sentiment that we are bearish in the short to midterm, but we have to keep in mind that market is continuing to cultivate higher lows and higher highs. And that's exactly what I said back in mid-May. Despite the fact that we do have the short-term, mid-term selling pressure looking at this 65-minute chart. Does that make sense? So at this point, let's try to find out, okay, so then where is the bottom? Where are we going to find support, right? So right now we're sitting right on that rising pivot. That in itself is a pretty strong support. We haven't seen the market testing it though. Now we get to see how the market is going to behave, right? So that's the support, that's the resistance, that's the resistance, that's the resistance. That's a slight small support there. And now we're right at that level. It is no mistake that we like trade right there. We just stop selling at that vicinity because the market already pushed quite a bit. So this is going to be, and we blew through all these short-term moving average, the mid-term moving, blew through the, the gap area, also blew through that, that mid-term moving average, the blue dotted moving average. And the next bigger support was that rising pivot because this rising pivot has been respecting this whole time. And also I put a Fibonacci from here to here because I think this is important level, right? That mid-May low is very, very important. And then the June highs, which is here at 2320, that's important. So that's where I measure from here to there. And we're right on that 50%. So here are the levels that I'm going to give you going into tomorrow, next week. And obviously we'll continue to follow up on this. First of all, we have the gap area at 297 or so, right? That's a gap area. If we do lose it, because I don't want you to be so precise with that level. It may, you know what I mean? It may come lower, a little lower, go a little higher. It could have a little zigzagging action before actually finding support. So I don't want you to be like, oh my God, we got slightly below it. That's going to go to 280. You know what I mean? This is a level I want you to look at. I want you to look at this level. Maybe put another support level like this, just so that you give yourself some room here. This is what I want you to do. Put a box instead of a line. So you kind of know that this is the level of strong support like that. That's way, if you want to put a nice support in your chart, that's how you want to do it. I don't want you to put a thin line and then just all of a sudden you become bearish, it got slightly below it. Anyway, so that's that there, right? We're coinciding with this level, that's rising pivot, which is also colliding with that 50% retracement on Fibonacci, and then right below at 297, because the market could continue lower, which is 297 is a horizontal pivot, and we got that gap in that vicinity. And then we have that longer term moving average residing just right there. Remember back in May 13th, 14th, that's where we saw bottom. Market soared in like 2-3 weeks. We saw market going 16, 17%, almost 20% move in just 2 weeks. That is a huge move because remember, market sometimes takes an entire year to make 16 to 20% run. So that moving average is hovering just beneath at 297. It will be better for bears to let bulls have their way and make that move and then bring it lower. So continue to cultivate lower highs and lower lows. If we continue lower, if bears are keep pushing, you're gonna see some big reversal because look at this. This is why. Because we have to be fair here. Remember, we've been talking about how bulls are getting tired. Remember, we talked about that. We talked about how bulls are getting tired. We were fair in my analysis last couple weeks or like couple months, actually since April, March lows. Every time we got into, when this thing got into overbought level, we talked about how bulls are getting tired. Bulls are getting tired. Remember, we talked about that. Bulls are getting tired. Bulls are getting tired. Bulls are getting tired, right? Where are we now? We actually overshot it, but we're just right there. We're at an extremely oversold level, and bears are tired. Bears are very, very tired because they really pushed this. They really pushed it. Because I think last time, like usually it gets about, you can see right there, Usually it gets about, so you see that number? I want you to pay attention to that number. 6.16. This time we got into 4.33. So it pushed it much more than they usually do. So we got into very extremely oversold. So I think at least we're gonna see oversold bounce, you know, and we have to re-examine tomorrow. Remember, the market is gonna give us a piece of information every single day. So we are oversold. Bears are tired. We probably will going to see oversold bounce. And then with that information, we can able to kind of gauge where the market is headed next week. So tomorrow is the Friday. So we'll do the market update video. Let's continue to stick with, you know, which we've been doing. We did that last weekend. Let's look at all the indices and then kind of trying to, you know, assess the situation. So we'll look at S&P, Dow, and the NASDAQ, and the SEMI, and the, you know, Russell 2000 and all that tomorrow, and look at some of these levels. So, so I think we're standing at a level potentially of a support, and if I think it would be better, like I said earlier, it would be better if bears let the buyers bring it up a little bit, maybe go up to hit that resistance, that moving average, and then fall lower. That way, you know, after that, maybe then you can let this oscillator rest a little bit and then come back down. That way we can get up and then pull back. And maybe, because bears want to focus on building a trend instead of just bring it down hard. Because bring it down hard wasn't so successful for bears for this entire rally. They gotta start focusing on building something, building a downtrend. We don't have a downtrend. We have a down move, very, very fast down move. We don't have a downtrend as of today. Does that make sense? We still have uptrend. We still have uptrend, right? So we still want to give benefit of the doubt to the buyers. Somebody like me, you know, as a long-term investor and a position trader. As you guys know, you guys heard me talking about how I've been taking profits, trimming from my long positions here and here. And I was doing that, and I was pretty busy about this week, taking off a lot of my longs this week. And then as a long-term investor, I think this is a level that I'm thinking to buy and accumulate. This is a level. I actually want the market to continue lower so I can buy more, you know, shares and stocks and accumulate more tomorrow and going into next week. Again, my time frame is probably different than a lot of you guys. If you guys are, you know, short-term trading, swing trading, it's probably you gotta go with your own time frame. But for my time frame, this is a kind of good level for me. 300, 297, 293. So I'll be probably buying maybe some call options on indices somewhere in this vicinity. Maybe buying some, you know, accumulating some, you know, equity shares, maybe some leveraged ETF and all that. So if you're actually, you know, that's kind of what I'm going to be doing tomorrow and next week. So if you're kind of interested in, you know, what I'm going to be buying, what I'm going to be accumulating tomorrow and going into next week, I'll probably start accumulating tomorrow and next week. Go ahead and check out the Traders Club there, and you can sign up for the membership, and you'll get the updates on which, you know, stocks and some of the lever ETFs and some of the call options I'm going to be buying. But anyhow, I'll come back tomorrow, right? I'll come back tomorrow, and then we'll re-examine. We'll see, and I think this will be important. See, you know, that thing is just extremely oversold at this point. I think ever since March, April, it might not have happened next day. It might not have happened next day, because here you can see it took a couple days. Every single time we did see a bounce. 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 Are we gonna see a bounce from here? We're gonna see a bounce. The only thing will be, are we gonna see a bounce to go back to make new highs, right, above 320 and fill this gap? Or are we bouncing to create a lower high so that bears can create their downtrend? That will be the question we need to be answering. We need to follow up. So we'll follow up tomorrow on the video. We'll go from there, right? So you guys enjoy your evening. Good luck trading tomorrow.